Welcome to Right Side Trading, where you can learn how to trade on the right side with confidence. Today is November 5th, 2016. It is a Saturday evening around 5:30 in the evening, and we are here to talk about the weekly market review. But before we do so, let me direct your attention to the bottom of our webpage. If you look at our disclosures statement, the section I want to highlight in particular is this area right here that says that our products and services are provided solely for educational purposes. Written and verbal statements, including those provided on our website, staff members, testimony individuals, affiliates, and clients are personal judgments and should be regarded as such. These written and verbal statements do not constitute investment advice. The government does want us to let you know that we are not licensed financial advisors. So please, before you make any trading or investment decision, make sure you consult the advice of licensed financial advisors. We are just simply people that look at charts and give your opinion as to what we see. All right. That being said, let me take you to the chart for the week, and of course we will start with the chart of the SPX. So really quick recap from last week. You can go to our YouTube channel, and which is Right Side Trader, and see the video that we did on last week, where we were showing you that the market was kind of consolidating in this pattern right here, which was a triangle. And we saw some weaknesses that was telling us that, hey, you might want to watch out. This market might actually start dropping. And lo and behold, that's exactly what happened. Okay. Now it's a little bit flipped, and we're saying, there are some things that are showing some areas of strength. The only thing that could be that joker card is, as you guys all know, on Tuesday we have the election coming up. So, Wednesday, how the market reacts to finding out who is the new president could really be that joker card that could throw things around. So with the exception of that, if we were just to look at the charts and we didn't have the election coming up, I would say that we are at a place where the market could start reversing, okay? I'm going to show you some things that will show you that. However, we have to still be careful, even though the charts are showing us that we are at an area where we could actually possibly reverse. The fact that we have the elections coming up is a big joker card that we just have to factor in and play cautiously, okay? So that's kind of like what we see. Now, let me show you some things that we are seeing. Now, I'm not going to show everything again. But again, it's just a little bit of things that we see, and then we'll let the market prove us right or wrong. All right. So the first thing is, the fact that there are about six. Well, actually, let me take that back. One person texted me earlier last week, or this week, I should say, and said that maybe the market is trying to come out and fill this gap right here. So the first thing I want to address is the fact that, would it actually come out here and fill this gap? The answer is I don't know, okay? But I would say that there are six areas between this price point right here and this area right here that we see that has potential to reverse, okay? I'll share with you about 2 or 3 of them, but I won't share all 6 of them. But, the thing is we have to be watching what happens when price comes to each one of those 6 levels before it gets to this level. That tells us whether or not this market is trying to reverse. So the first one I want to point out is this level right here, okay? If we draw this trend line right here, we can see that the market is here. In the past, when the market was at this trend line, it rallied a little bit, albeit a small one, but it still rallied. Came back to that same trend line in the future, it rallied again, and now it's back to that same trend line again, and so we can anticipate a rally in price, okay? So that's the first one that we can look at and say, there's a possibility that this market could possibly reverse somewhere around that area. The second is this area right here, okay? Let me zoom in just a little bit so you guys can see this, all right? And it is this area right here that we're looking at, okay, where the market, when the rally began in July, the market came to this level. I should say the market rallied. This is the Brexit movement that we had. It rallied, took a break, and then took off again from this level. So that automatically becomes a level that we should watch going into the future. And if we put a zone like this, then we could be looking at this and say, hey, the market could reverse anywhere between these 2 areas right here. So that is the second one that we see. And then the third one that I want to point out, and then remember there's about 6 of them, okay? But the third one that I want to point out is this area right here, okay? where we see that the market rallied, came back to this same trend line right here, and then now here is our opportunity again, where the market is coming back down to this level as well and is ready to rally again. All right, so those three right there are all areas that the market could potentially reverse before we even get to this level right here. And there's three other more that I would not cover right now. However, the idea is we can see that the market can reverse at any one of these areas right here. Okay, it could reverse on this line, which is this line right here. It could reverse on this downtrending line, which is, I mean, it's already right there now, or it could, you know, bounce off of this or this one right here. So needless to say, this area right here is a strong area of confluence, all right, that is showing us that there's a possibility that this market can reverse back up again. Okay, now the other thing is that we have a reversal candlestick. Okay, so let me take off all these lines right here. Okay, and for those of you guys who might know how to use candlesticks, we look at this right here, and this is a classic inverted hammer signal. Okay, this is a classic inverted hammer signal. And the potential of this is the fact that, you know, once now that we've seen this reversal signal at confluence areas of support, there's a very strong chance that this market can start rallying back up again. So we just have to be patient and wait to see. Again, if it was not for the election coming up on Tuesday, I would be very, very sure that this market is probably going to start reversing back up. So we just have to be patient and wait to see, because of that joker card called the election that we have to deal with. Okay, so I'm going to take you back to some, let's see, let's go back, let's see here. Let's go back just 4 or 5 years, daily chart. And what I want to show you guys is something like this right here. This is kind of like what we're looking at now. I know that this is a red candle, but in a sense, we have a green candle right now. But that was an inverted hammer that we saw right there. And the market, oops, what did I just do? Let's do this again. What did I just do? Okay, so we had that, and then the market did what it did right here. You know, rallied and came back down. Another classic example of an inverted hammer was this one right here. If you guys can see this, okay. Let me zoom in just a little bit more. Okay, was this one right here, this inverted hammer. That's kind of like pretty much what we have right now. All right, and then the market rallied back up again. Okay, oh man, what am I doing? Let's reverse this back a little bit because I want you guys. Okay, so here it was right there. All right, oops, let's do this one more time. Sorry about that, guys. So we had that inverted hammer right there. I want you guys to see what it looks like. We had that inverted hammer right there, and what ends up happening was the market took off and did what it did right there. Okay. Another example of this inverted hammer again was back in, I want to say, December of 2015, which is this right here. Okay. So let's just scroll back right there. So this is December 2015. We had this inverted hammer right there. Next thing we know is that the market rallied up to new highs again. All right, so that's kind of like the example that I'm trying to show you guys here. I'm not sure if there was any others that I saw from the past that look similar to what we're about to experience right now. But nevertheless, that's what we're looking at, okay? So again, let's go back, SPX. Oh, sorry, we are on the SPX already. Let's go back to the 1 year daily chart. So we have seen the fact that we have, you know, price coming down to that level right there. That's probably one of the biggest ones where now we just need to see price really rally back up. Now how high it goes, whether it makes all new highs and all-time highs, that we don't know. But we can say that, you know, we are at an area where price could potentially start reversing back up again. Okay. If we go to the weekly chart, let's go to the weekly chart. All right. Let's remove this right here. Okay. One of the things that I have been talking about was the fact that we did not want to see price go back below this area right here, and it has. Okay, price has done this, and that's the bad thing about it. That's the bad news, the fact that price closed down here. Okay, so the question is, if by the end of next week, by next week Friday, we can get a close back up here, this could be an anomaly that makes it go higher. But if not, and you know, this area is an area that we definitely want to see the market clear by the end of next week. If not, we can see this market start going further down. Okay, so that is what we're looking at as far as the SPX is concerned. If we go to the Russell, let's look at the Russell. Okay, we can see that this area right here is exactly where on the weekly chart. Now this is the Russell on the weekly chart. The Russell has literally come back to that area. All right, and then now the question is whether it's going to reverse or not. Okay, but it's come back to that area where, you know, any lower than that could spell big trouble. All right, now if we go to the daily chart, we can see that on the daily chart, and all I'm going to do is look at candlesticks in this case, we see that we have an inverted hammer as well. Okay, we have an inverted hammer at areas where it's showing some really good signs of a reversal. Now on this one, we have this red line right here is from the weekly reversal point. Okay, but if we take this right here, oops, excuse me, if we take that right there, we can see this, all right, as the reversal area. I'm sorry, a trend line where price came close to this area, rallied back up, came down to this area right here, it rallied back up, came down here. Notice how it dipped below it a little bit, okay? And this is exactly what I'm trying to show you on the SPX, where now that we've closed below here on the weekly chart, if we can get another week where it now closes back above that, that could be a very strong sign that the market is trying to rally. Let me show you what I'm talking about again, okay? So this is the SPX on the weekly chart, all right? So the fact that it closed below this, if by next week we can get it closed back above here, a green candle that closes back above here, that would be a very strong reversal to anticipate, all right? So that's what we're looking for. You can see this in action when we look at the Russell, okay? We look at the Russell, okay? This was that area of reversal that we had to watch. The price closed below it, but the week after that, it closed right back above it. That was telling us that, hey, you know, expect good things to happen, and that's what's happened now. However, what we're looking at now is the fact that on the Russell, we're now at an area where a reversal could take place. A reversal from the bigger time frame, which is the weekly, as well as on the daily, where we're looking at this uptrending line right here. So the fact that we then now have candlestick signals that are trying to show us that reversals are about to take place, that's something that we need to pay attention to, okay? We go to the Nasdaq, all right? The same inverted hammer signal has applied again, all right? So the fact that the SPX, the Russell, now the Nasdaq are all showing inverted hammer signal is a very, you know, good sign that, you know, we need to pay attention to, okay? If we take this right here on the Nasdaq, let me redraw that again. Sorry about that. Okay, we're looking at this right here. This line one. All right, we can see that, you know, the Nasdaq closed below it twice, but the fact that we now have a reversal signal could spell that, you know, if we get a close back up here again by Monday, this could be a sign that this market is going to try to start rallying back up higher, okay? So we just have to pay attention to that. Now, one thing that you can look at is if you look right here, take this right here, okay? Did that wrong. Let's try that again. Okay, so we're looking at something like this right here, where again, you know, it closed right beneath it, so that's something we have to pay attention to. But again, the fact that it wasn't just a red candle, a reversal signal, could show us that, you know what, this could be one of those where, just like we had right here, where it closed 2-3 days later and then came right back up above. If we see market come back above here, this could be the next big rally. All right, now let's go to the Dow Jones Industrial. Okay, and almost like the SPX, what we're looking at on the Dow Jones Industrial is we're looking at the fact that the market came down here, all right, and now it's trying to rally back up at this level right here again. Okay, so that's something we can watch for, and just saying that, you know, the market in general is at an area where there's a potential for it to start reversing back up again. The question is this the place that is going to do so? All right, now on this we also have another inverted hammer. Okay, Notice how on the Nasdaq, the Russell, and on the SPX, we had green inverted hammers. In this case, it's a red inverted hammer, which still means the same thing, that this market is looking like it's ready to start reversing back up again. All right, and then lastly, we'll go to the Dow Transportation. And on the Dow Transportation, if you remember correctly what we're talking about, one of the things we said is like we wanted to see the market close above this red line. Okay, even though the market was still range bound in this channel right here, we wanted to see the stock of the market close, the Dow Transportation close above this red line right here. Okay, and the fact that it has done so, even if we redraw this line and connect all the highs, let me redraw this a little bit. Okay, and we do this right here. All right, let's take this one off for a second. Okay, we can see that a close above this line right here would really mean that this market is ready to go higher. Okay, a close above this line right here would mean that the market is ready to go higher. But the interesting thing is the fact that on the Dow Transportation, we're still in that range bound right there. We having problems breaking up above that level. So I'm saying that if we see a break above this level right here, this would be something that would tell us, you know, we are really ready to go into a rally mode. Okay. But more importantly is really, I didn't draw that line the right way previously. Let me redraw this, move that. This is the line that we really should be looking at, and the reason why is we connected these three right here is what we did. And now that, you know, this market is trying to break above this, we just have to wait and see. But again, there's some signs right here that's just showing us that this market is trying to go higher, not lower anymore. So we just have to be patient and wait. Again, the only issue that I have with this market right now is we have a major event, a major event that could literally throw off all the analysis that we just did right now. Okay, so for that reason, we just have to be patient. All right, be patient. Let the election come out. Let's see how the market reacts after the election on Wednesday. So the earliest that anybody should really be trying to do anything based on the charts is really by Thursday. Let's see how the market reacts on Wednesday to the election results, and then we'll go from there. Okay. So again, now are we trading based on events? No, we're not. What I'm saying is, because of the event that we know that is a huge event that could really affect the market, you know, not just in the United States but globally, you know, sometimes it's just best to sit back and just watch what happens and see how the market reacts to that. The question then becomes, you know, would we miss out? It depends on how you're looking at it. If you're a day trader, yes, you might miss out from that day's profit. But if you're a long-term trader, a swing trader, somebody who's looking to take advantage of this market over the next month, 2 months, 3 months, you know, one day's event is not going to like really be catastrophic. You won't miss too much from one day's event. Okay, like even if it's a big move. The good thing is we know what to be looking for, whether the market rallies up or down. The only question is, which way is it going to go once this news comes out? If the market favors the election results and it starts going up, then we can anticipate the market going higher even more because of what we see as far as the charts are concerned. So that's something that you just want to pay attention to. If you go to the monthly chart, you can see that we still broken above that downtrend that we have right there. So we're still good as far as this market is concerned. And the good thing about this is, again, ever since this low right here, we've been making higher lows, higher lows, higher lows, higher lows, even though we had a doji. But again, remember what I said, because of the election, don't be surprised that the market doesn't do anything until after election. But the good news is we have higher lows, higher lows, higher lows, higher lows, and another higher low, which is all positive signs of a rally in the market. Okay, so now we just have to wait to see how the election affects the market. All right, so we will end there, and just remember to go to our YouTube page, subscribe to our YouTube page so you can get these videos as we make them, and post that as part of your view of the market to kind of see how the market reacts. Outside of that, go to our website, www.rightsideTrading.com, www.rightsideTrading.com, and go to our homepage, check out our video, our courses, contact us. You can learn how to read these charts if you just know what to look for, okay? And for those of you guys who might be subscribers students of ours that is paying for the new subscription base that we came up with, where we show you the stocks that we are going to be trading for the month of November. We should have that list compiled by the end of tomorrow. So come Monday, we will have the stocks that are bullish, ready to go even higher, or the ones that are bearish, ready to go lower. So whichever direction the market goes, we will have stocks that we can trade that can make us some money. Until then, remember to trade on the right side with confidence.